guys, today we're going to start Chapter 12, and Chapter 12 is all about payroll. So, up until this point, we learned about how to journalize different transactions if we are buying things or selling things, making sales, receiving income, but we never talked about how we actually pay our employees. So, that's what we're going to be doing today. So, our objectives for today are to learn how employees are paid and then how to calculate hourly employee earnings. Before we get started on this chapter, there are some terms we need to be familiar with. The first is wage, and that's going to be the amount paid to an employee for every hour worked. So when you go to get a job, most likely you are going to be paid a wage. We talk about minimum wage, which is debated and changes state by state. Typically, you're going to get paid, $11 an hour, $13 an hour, something along those lines. That would be a wage. Whereas a salary is a fixed annual sum of money divided among equal pay periods. So let's say I make $50,000, I get paid 20 times throughout the course of the 10 months that I'm working, and so that $50,000 would be divided by 20 different pay periods. Typically, salaried employees are going to be paid once or twice every week, twice every month or once every other week. So it's either typically going to be the 15th or the last day of the month, or the 15th and the 30th, or every other week. We also have commissions. Commissions are a method of paying an employee based on the amount of sales the employee generates. A lot of times with commissions, they'll have a base salary or a base wage, and then commissions will be earned in addition to those small wages. And then we have total earnings. So you, as the person responsible for payroll, is going to be responsible for figuring out what the total earnings are. And that's going to be the total amount paid by a business for an employee's work earned by a wage, salary, or commission. And we could also refer to total earnings as gross pay, gross wages, gross earnings. Any of those mean essentially the same thing. It's how much you're making before you take out deductions, which we'll talk about a little later. So like I said earlier, we are going to pay employees either weekly, every other week, twice a month, once a month, and that is going to be the pay period. So the pay period is the number of days or weeks of work covered by an employee's paycheck. You, as the person responsible for payroll, needs to know what the pay period is, and it's going to typically be standard from employee to employee. It's not going to change. Payroll is the total amount earned by all the employees for a pay period. The payroll clerk is going to be the accounting staff position, so the person that does the bookkeeping or accounting for the company. The payroll clerk is going to be the specific person that pays everyone. So not only are they going to be writing the checks to everyone, but they are going to journalize those transactions and post those payroll transactions in the general ledger. Now, in order to calculate how many hours an employee works, a lot of times, especially for people earning an hourly wage, they are going to utilize a time clock. So a time clock is going to be a device used to record the dates and times of each employee's arrivals and departures. Different people calculate this in various ways. I've had jobs when I was younger where we would actually have a physical card that we would punch in. I've had other jobs where we would go to a computer and we would type in our employee ID number. There's lots of ways that you can do it. Here at school, we just use our ID and we swipe in and out every day. So depending on your company, that's going to change how you're keeping track of the hours that you're working. But if you're in charge of payroll, you have to be able to access this information in order to calculate how much you're going to pay an employee. So when doing that, here's an example of a time card. This can be a physical card or an electronic printout. And what you're going to do is you are going to calculate the roundabout hour. So when we're doing this in MindTap, we're calculating, so it says morning and afternoon, 7:59 to 12:02. We're just rounding, that's 4 hours. And then 12:59 to 4:53. We're rounding that as well. That's 4 hours for a total of 8 hours in the day. So we're going to calculate our regular hours for each individual day. And then we're going to calculate overtime hours. So overtime hours can be calculated differently, but typically it's going to be if you work over 8 hours in a day. So you can see here, this person worked over 8 hours in the day. For our purposes here, that's how we're going to calculate it, although it can change from business to business. Then you're going to calculate the total regular hours and then the total overtime hours. Like I said previously, there are different types of time clock systems. So updated time clock systems use computers to record time, and they print out the accounts, the reports. So you won't have to do that by hands necessarily. So it just depends on your company, and this is an example of what an electronic one will look like. And like I talked about previously, you can clock in using a badge, a pin, or even your fingerprint. So what we need to do is we need to calculate hourly employee total earnings. So that's going to be calculated using the time card data that we just looked at. So hourly wage rates are obtained from personnel records. Not everyone who works there is going to get paid the same, so you need to know exactly what each employee gets paid. Also, something to note is that the Fair Labor Standards Act sets the minimum wage. So, like I said before, minimum wage varies from state to state, and rules for overtime. Most businesses are going to pay 1.5 times the hourly rate for timed work over 40 hours a week. But like I said, here what we're going to do is we're just going to look at if it's over 8 hours a day. So in order to calculate the regular earnings, what we're going to do is take the regular hours, we're going to multiply that by the regular rate, and that's going to give us the regular earnings. However, we also need to calculate the overtime rate. So the overtime rate, like I said, is 1.5 times your regular rate. So regular rate multiplied by 1.5 or 1.5, that's going to give you your overtime rate, $22.50 in this situation. Then we can calculate our overtime earnings. So we have our overtime hours, 6.5 times our overtime rate. That's going to give us our overtime earnings. And then in order to figure out our total earnings for the pay period, we're going to take our regular earnings and we are going to add in, this says multiply, but it should be add. So we're going to do a little plus sign here. Just add in a little plus sign, and that's going to give you your total earnings.